So today we're going to watch how Wall Street profits from student loans. I've always known, obviously, that there was profits in it. That's the reason why the whole student loan forgiveness thing to me just was a joke from the beginning. Never really felt real, really felt like it was pushed for votes with no real intention of success, right? But that's a whole nother video, a whole nother topic for another day. I wanted to share this because I've never even thought about how Wall Street themselves can profit. But I also wanted to share this for those of you who still may be confused as to why the student loan forgiveness program was a huge failure, right? And it's pretty quiet around that whole topic now, at least from what I'm seeing. So y'all let me know what y'all think, all right? Again, we're watching how Wall Street profits from student loans. Y'all let me know what y'all think. It's Ricky Rich for Black Primacy. Please don't forget to like, comment, subscribe, and turn on your notifications.
Student loans are a big business. The U.S. has amassed over $1.7 trillion in outstanding student debt. Until recently, it was the largest non-housing debt for more than a decade.
The first time it broke $1 trillion was back in 2012, and that's when it caught all the media attention.
We've seen a big growth in the cost of education over the past 10 or 20 years, and this has really showed up in the student loans outstanding.
But while more than 43 million Americans are currently holding student debt, many are unaware of what exactly happens with their loans.
I think it would be pretty difficult for the average American to try to track where their loan actually resides.
There exists a market where billions of dollars worth of student loans are packaged and sold as assets known as slabs to some of the biggest investors in America.
I would say that most average Americans are not aware of student loan securitizations.
These securities are very, I would say, not transparent, and it's hard to understanding by average investor.
So what exactly are slabs? And how does it help Wall Street profit from student loans? Securitization is the practice of converting assets, usually loans, into securities that can be bought and sold by investors. Wall Street uses securities to trade almost everything you can think of: auto loans, business loans, and even aircraft leases.
Let's say I'm a bank and I want to issue a bunch of loans. After those loans are issued, I can then sell them to a third party in order to securitize them. Now, just because I sold them doesn't mean that I do not get to account for the estimated value of those securities. I've just sold their interest to a third party. So it's a very lucrative arrangement for a corporation. It's a very lucrative arrangement for the investors.
The biggest and the most well-known type of asset-backed securities are mortgage-backed securities, or MBS. There were more than $12 trillion worth of outstanding mortgage-backed securities by the end of 2021.
Securitization, its history really started off with the mortgage market. And the mortgage market is a much larger market than other forms of consumer credit, especially other forms of financing of consumer credit. So that lends itself to being a much larger market.
Student loan asset-backed securities, or SLABs, refer to securities that are specifically built around student loans.
The way that borrowers get student loans is of two ways. If they're getting a federal student loan, they usually apply using FAFSA, right? If they're going to get a private student loan or a private credit student loan, they would apply through a bank or through a lender. The loans that are then created are bundled together into a pool. And these pools are often highly diversified by regions, by school, by borrower type, for example. And the diversification really protects the investor from losses that are idiosyncratic. They're then transferred to a special purpose trust, which is set up to hold the loans and issue the securities. Once that's done, the securities are then rated by a credit rating agency. Once they're packaged in this way, the securities are then sold to financially sophisticated institutional investors. When the borrower pays down their student loan, that cash flow is then used to pay down the investor.
Sallie Mae and Navient are the two largest publicly traded companies issuing slabs. These assets are underwritten by some of the biggest banks and corporations, like Bank of America, Barclays, JP Morgan, and Goldman Sachs. $92 billion worth of student loans were issued as slabs within the past 5 years.
There are two types of securitized student loans. So you have private student loans and you also have federal student loans that have been securitized.
A majority of slabs today, 56% to be exact, are based on loans that were made before 2010 under the Federal Family Education Loan Program, also known as FELP. These loans were enticing for many investors because they came with a federal guarantee that protected them against losses from defaults.
For about a decade, FELP securitizations, or FELP ABS, were the only form of student loan securitizations. It's a program where a private lender originates the loan based on the guidelines that have been put forth by FELP. As long as those guidelines are met, the loans are guaranteed by the government, and that guarantee runs between either 97 to 100% of the loan balance.
But shares of private loans have grown with the recent boom in the private student loan market. The industry is estimated to have grown by more than 70% over the past decade.
Based on my research across the board with student loans, the biggest sense of security outside of the federal guarantee is the question of whether these loans are dischargeable in bankruptcy.
While it is certainly possible, current bankruptcy laws make it extremely difficult for student loans to get discharged compared to other types of debt. For investors, that translates to a lesser risk of default.
The securitization of mortgages, all student loan or auto loan, actually has a very positive motivation at the beginning. And that is to mobilize the capital around the world and channel that to the most needed. You are no longer being restricted to your local bank or a specific lender. It's just the whole liquidity enhancement around the world. So that itself is a pretty good idea, but Wall Street sometimes can go a little bit too far.
As student loans continue to balloon,
they go too far all the time. That's the reason why this. Well, let's just watch this.
As student loans continue to balloon, experts have expressed growing concerns surrounding the slabs market. The worry is that slabs could pose a systematic risk to the American economy, similar to how subprime mortgage-backed securities contributed to the crash back in 2008.
This is something that came up for me back in 2018 when I began to study student loans, and prior to that, I had been covering mortgages and specifically mortgage-backed securities. I saw the parallels and it really freaked me out because I realized that this cycle was only going to repeat. One of the key ways to uncover these similarities between student loans and mortgages is to look at the affordability issue. You have a bunch of well-intentioned people hoping that their income is going to increase. Now, when the income does not increase, you have a lot of loan debt and nothing to pay it with.
The national cohort default rate for student loans has plummeted, boosted by the payment pause during the pandemic. But the Consumer Financial Protection Bureau estimates that 1 in 5 student loan borrowers have risk factors that could cause them to struggle when federal student loan payments resume in October.
I personally do not feel like the inability to pay something back really needs to be scary. I think what's scary about it, and what was scary about 2008, was the tremendous uncertainty that everyone had about what valuation even was. Housing prices were falling dramatically. Nobody knew when housing prices were going to stop falling. And the reason that they were falling was because their valuation had been propped up by the mortgages that supported them. So when the ability to pay was revealed, that's when we saw this tremendous crash in the housing market.
When discussing student loan auction rate securities, a type of slab with variable interest rates, Navient, a major player in the slabs market, acknowledged that an economic downturn may cause the market for auction rate notes to cease to exist, which could lead to holders of auction rate securities to experience a potentially significant loss of market value, according to an SEC filing from 2015. But not every expert sees eye to eye.
I think to say this market is going to be the trigger of the next financial crisis is really overstated.
Nobody's really concerned about the government guaranteed portion of this market. It's really that private credit market. The slabs market is much smaller and therefore pose less of a systemic risk to the economy.
There's no way, with the depth and the size of the US financial market, there is no way.
Increased credit enhancement following the devastation of the 2008 recession was put forth to protect against this exact scenario.
If you're looking at Moody's and Fitch, they're rating these pools with extra vigilance. They are asking for internal credit enhancement, external guarantee, extra credit support in terms of over collateralization. Even if there are substantial charge-off and stuff like that, they're mostly going to be absorbed within the internal and external credit enhancement measures that have been put forth very aggressively after the financial crisis.
Recent developments, like the 3-year pause on federal student loans and the Biden administration's initiatives to relieve student debt, have sent shockwaves through the slabs market. The volume of newly issued slabs dropped from the height of $27.3 billion in 2021 to just $7.1 billion in 2022.
I do not think that slabs is a really attractive investment at this point, given that we are in a very high interest rate environment and you look around with risk-free treasury security paying 5%. Are you really attracted to slabs at 5%? A lot of investors really don't know much going on with the pool, and the transparency is pretty bad.
But slabs are not going away anytime soon, especially as tuition continues to rise and more borrowers rely on private loans to pay for their education.
Private credit has always been used to supplement the federal loan program, and that's going to continue. I think that there will always be a need to do so. To the extent that that continues, those lenders, the lenders of the private credit student loans, will be looking for ways to fund these borrowers.
As the student loan market faces a period of tumultuous change, the securitization market must also change and adapt to it in order to thrive.
I think in general, slabs is not evil. Slab is just an opportunity for lenders to package illiquid student loans and to create credit enhancement to a point where average investor might participate in financing in these pools. But in the meantime, though, as we move into the future, more education, more transparency about slabs is necessary if this market wants to continue and have a healthy contribution to the financing of our nation's student debt.
So at the end of the day, I've learned from that despite what you may have been told or what you may have believed, those student loans weren't going anywhere. All right. I don't know if y'all caught it, but I noticed two strong points with that. One was that the government, the investors, or I'll say the government was probably running dry or is probably running dry on investors in this high interest rate market. Interest rates are coming down slowly, but they're still pretty volatile and high overall in general, right? As they described, when the interest rates are high, it makes these types of loans unattractive to invest in. Probably mostly so because when interest rates are high, less people are borrowing, right? So there's not as much money flowing through. So if on one end, and then on the second end, you got the government who is pretty much relying on these investors uh, for the whole process to work. So if I'm the government, why would I cancel the student loans um, when when it's already hard enough for me to even get investors to begin with, right? That's on the back scene. Up front, why would I cancel the student loans? Period. When it's a money making machine, right? Like, how do I tell all of these people you don't have to pay, and I still have to pay my investors back? Like, to me, something's amiss there. Like, it doesn't make sense as to how it would ever be possible to do it just based on this structure. The only way to do that, the only way to do that would be to dismantle this whole structure. But then again, you run into like, who's going to pay for that? Right. And that was always the main question when they were talking about was who's going to pay. So then the money just doesn't disappear. The debt doesn't just disappear. Someone's got to pay for it. Right. And so if you decide to just dismantle the whole entire thing, the debt is still there. Who's going to pay for that? So I'm glad that the conversation is quieter, because it felt like it was, but it felt like they were just blowing smoke. And that's what it ended up being, right? Like I said, neither administration is talking about it anymore. I know towards the end of the Democratic campaign, I say the last 3 or 4 months of the Democratic campaign, they were trying to tout some of the success they had in other areas of student loan forgiveness, but the big giant one that they were talking about for the last 4 years was it was never going to happen, and it never is going to happen, and they stopped talking about it. And I'm glad I don't want to say I wasn't for student loans, because I know a lot of people personally that could have benefited from them. But my main issue, and I've said before on the show, on this channel, is that forgiving the loans, to me, just it messes up the mentality of the entire crowd, right? Because I feel like if I'm someone and I got 30, I think the average was like $35,000 in student loan debt. If I'm someone who had $35,000 in student loan debt, and it just gets taken away from me for free, and I didn't have to work for it, I feel like for most people it will trigger something in their brain to make decisions, or to not make decisions wisely. Because at the end of the day, everybody who has student loans has them signed a document stating that they would pay them back. Now, whether or not you believe some lie that was told to you, that's completely different. But at the end of the day, the contract was there. I'm going to take out these loans. I'm going to pay them back. Right? And so I think as a culture of human beings, we need to be able to accept the things, the mistakes that we have made, if we find it out that they are mistakes later, and move forward, and not look for ways to not accept them, in a sense. Right? Now, again, don't get me wrong. If I had student loans, which I don't, I actually paid my student loans off. I'm proud to say, right? $35,000 worth. 32,000 and some change, to be exact. But if I had student loans, yes, I would have been hoping for the student loan forgiveness as well. Right? But coming from a person who busted his ass and made sure that I got that cleared up before, I think overall I might have paid like $1,500 in interest, right? Like I I took them out for my education, paid them off, and to me, um, getting my education and only having to pay an extra $1,500 was well worth it, right? I couldn't imagine having to still be paying off that. I don't want to say useless, but that education that I probably didn't need. Very helpful. Made things a little bit easier for me for sure, but probably didn't need. At least I didn't pay. I'm not still paying that today, right? So, I wanted to share this video just to let y'all know, like the the stuff wasn't ever gonna happen. It never will happen. And so instead of sitting around waiting on the next administration to do so, let's just get after it. Trust me, it's only hard for a little bit, and then afterwards it's the best feeling in the world. And then like for me, my risk tolerance around uh debt in general now is like at an all-time low. Like I have zero risk tolerance. Like I just don't mess around with it at all. Right. So me buckling down, paying off all my student loans and putting myself in a better financial situation has done more for me than my education itself, because now I'm in a financial situation where I can take more calculated risks. Right. I look at things differently. When I make a decision with the business, it's more like, okay, if all else fails, where will I be at financially, and can I accept that? Right? Versus when I was taking my student loans, right? And they're like, oh, it's going to be, $8,000 a year in student loans or however many. And I do that for however many years. Right. I didn't sit here and think to myself, okay, well, if it's going to be, between $8,000 to $10,000 a year, and it's going to take me, 4 or 5 years to finish, like this is how much I'm going to be. How long is it going to take me to get that paid off? How much money am I going to be making? Like I didn't make that whole analysis because I didn't even know how to this day. I don't even remember the paper that I signed that said like who I was getting my student loans from. Like I don't remember any of that. I can honestly say, I mean, if I wanted to be a victim, I can say I don't think I ever saw it. I don't think I ever saw the student loan carrier or anything, the name or anything ever on a piece of paperwork. The stuff that I signed had so much information. It was so mixed up and convoluted that my goal was just, I'm trying to get this signed so I can get on to the next part of my day so I can move on with life. Right. And then when the first accounts or this first statement came in, it was from a student loan holder by the name of Nelnet, right, which I think is pretty popular. I've heard of it outside of myself. I've heard of it a couple of times, but could you just imagine, like, you just signing paperwork and then all of a sudden it's like, oh, what is this? Nelnet? I don't know who this is. And you crack it open, it's like, oh, these are the people I just signed a big portion of my life to. It's like, it should be illegal by how easy it is to get into student loan, especially when you're at a younger age. And this was me later. I didn't go to college right after high school, so this was me later after having already worked some years and everything else. And it's still just it was just a joke. It was a big scheme to get me under their net. But yeah, if you're watching this and you got student loans, just get them out, get them done, get them over with. You don't want to be a part of this money making system, as everything else we're already a part of, right? Like, let's not be a part of one more government and Wall Street and financial scheme, or financial, well, scheme, but system, that is just built to keep you enslaved for the rest of your life. Let's not do that. All right. The same thing goes with cars and credit cards and all these other systems that are built to always have their claws in your back. All right. I had to share this. You guys know personal finance is my thing for sure, especially when it comes to black wealth. And, you know, we got to figure it out. The only way we're going to liberate ourselves is through financial means, in my opinion, in this country, right? This country is not and will never be a country that we can thrive in, just based on, you know, fighting for rights and all of that. This country was not meant for us. So why would it ever change? Right? And the only thing that we can do to fight that is from a financial aspect, because the one thing this country does put over anything else is money. I think we could all agree with that, right? So let's get our bag, and that's how the fight will begin. All right. So y'all let me know what y'all think. It's Ricky Rich with Black Primacy. Please don't forget to like, comment, subscribe, and turn on your notifications.